Hey everybody, this is Chris with ORBTraders.com. I'm going to go over the levels for tomorrow. I'm just going to go through this fairly quickly. I think everybody from the room knows that we had an ORB long on both the ES and the NQ today. Ran into that first fib target above for each the ES and the NQ at the negative 23%. Above that, we have negative 61.8 at 25.66, and then 255s above for the NQ. For the ES, 67.85s, 68.50s off of that fib draw from last week from the 17th. I think that was that Wednesday to Thursday. Came back and tagged the 38 and hit that first target. So it's very likely we could continue to see this bullish action continue and go into the next fib targets. But I'm going to go ahead and just clear out a lot of these draws and set this up for tomorrow. So let's just go ahead and dive in and do that. Also, let's go ahead and get Forex Factory. I know we went over the events already in yesterday's trade plan. Or yesterday's for today's, but we've got PMI 15 minutes into the open, so be aware of that. If you're going to play the 3 or the 5 minute open range, just make sure you're aware you are likely going to get some volatility. And then we also have JP speaking later on. But 30 minutes into the open, you've got Richmond Manufacturing Index. Wednesday, new home sales, and then Thursday, unemployment claims, final GDPs. An hour before the market opens, and then Friday core PCE. So just be aware of these events coming up. And tomorrow, specifically that 15-minute print right after the market opens, I would personally be flat if I'm in a trade prior to then. So moving back to the NQ, we'll just go ahead and clear out some of these previous levels. I'm going to go ahead and change this to the prior all-time high, last week's high. We'll adjust that draw, turn that to gray since we've already hit that. Now we have a new prior day high at 25.027.5. Mark that up as the all-time high plus prior day high. And let's go ahead and clear out some of these other levels here. Sunday's open. I'm going to leave that there. I'm going to change this a little bit. Actually, let's just go with full white. Take out the previous prior all-time high from last week, remove that, and then some of these fair value gap lines that I drew in, I'm just going to clear those out. And then we will adjust the prior day low to match up to today's low at 24.814.25. Take out this high as well. And we've already hit this fib, but I'm going to go ahead and carry this over because we could certainly run into TP2 on that fib draw. But you can also start looking at an extension by activating this and bringing this up to today's high. And just go into the actual indicator and update this. Let's actually go back and make sure we've got the correct pivot low. Technically that was supposed to be down here. I think that got dragged up there a little bit. So I'll just keep this in mind for a potential fib support zone that is right at 24.863s, maybe a potential bounce there, 813s. And then, of course, you can grab the last week's low and go up to today's high. Those are lower than this current fib, but I want to see the most significant fib, the most recent one from last week's to this week's. And then you also have today's RTH fib from simply the low to the high, and that goes from 24,945s down to 895s. So I'll just mark that up. And to make it less complicated, I'm going to actually just remove these draws, but we can see at 25.75, let's just call it, I'm just going to call it Fib 1, current week, just from Monday's draw. And let's just mark this down to the nearest 5-digit increment there. So we'll take those out, take these out. So at least we have that one fib level above. But of course, if you want to just leave the draw, I'm simply going from the low to high. You could certainly start, and I'm not saying that's the only fib, but you can certainly look at the first fib on the 15-minute candle. And you can see how it tagged 38 and ran to TP1, 2, and 3. So you don't have to, if you're trading this during the day, you can draw these up. You want to wait for your first pullback. So take your swing low to your swing high and look for a pullback. Today was a perfect example. Not every day is going to be this clean where you get a tag and then you run up and hit those targets. But because those targets all got hit, you're looking for the next high after the last one's hit. So it would actually be up here. We haven't actually pulled down into that zone. So matter of fact, I'm going to keep this draw. So we've got 38 to 61. I'm just going to draw this and keep this back here on this RTH session with a little bit of a different color. If we do pull back in to this area, then of course there's those fib targets above us that we've technically already ran into without pulling back. If you don't understand anything I'm saying, basically I'm looking for retracements on these charts where we have a full move up. Generally, you're looking for a retracement to go back down to at least half of that. And then if it holds, you're looking for solid entries. Pair that up with some internal confluence and look for your TP1 and then potentially your TP2. So anyways, moving into just the view for tomorrow. Fib 1 above, all-time highs there, prior day high, along with the prior day low. Sunday's open is right here, and I will just carry over some other levels into tomorrow's session from previous draws that could act as potential areas of support. But we have been very bullish since this new contract has opened, and we are, let's see, 1, 2, 3, 4, 5, 6 days into it. So those other levels are further down if you're interested. I'm going to share the chart out in the Discord, so you can just totally copy this and use this exact chart for Thinkorswim. All right, now moving into the ES, we're going to go ahead and just take out that red color since it's not as significant. It is certainly significant, but I like to keep my reds on the last high. So prior day high, actually we'll go all-time high, plus prior day high, mark that up as red. That's at 67.56 3/4. And we'll go ahead and move out some of these prior fib levels. We can actually keep this. This is another prior day. Or sorry, another prior all-time high. I'll just keep that noted there because I'm going to move this previous day low to 67.05 3/4. So we've got our prior day low, our prior day high. We've got the Sunday open, the prior all-time high. Actually, you know what I'm going to do? I'm going to take this out. This is not significant anymore. We're just going to keep this one here. And this is prior all-time high. So we'll keep that noted. And I suppose you could keep this one here. I'm just going to actually keep this on the left side of my chart because it is it was a significant level. It still certainly can be viewed as one, but I don't need it to be clunking up the right side of my chart. Anyways, last week, low, still down at 66.11s. There was another prior all-time high. I'm going to remove that. And then the fib target that I was talking about, on the ES that was hit is we're still above that. I was at 67.43s, so that was the low from the 17th to the high of the 18th. Technically, going overnight would be the way to look at this draw, because it's after that high that you draw. You're looking for a retracement, which we had the retracement. Bullish action pushed us above. We ranged, stayed above, and then we continued today and hit that first TP. Next TP is 67.88, but just like I did on the NQ, I would be looking for the fib draw from either the current leg up, which puts this fib zone. I'm not going to go all the way down to the 78. That's my last line in the sand, just a heads up. I like the golden ratio between the 38, 50, and 61s. So you have that fib, which I actually would like to bring this over to tomorrow all the way. And then you have the daily fib draw from the swing low to swing high. That is above. And we'll also bring this one over. Maybe make this a little bit of a different color. So a couple zones there, and then you can of course see the TPs. 67.70s, I would call it. You can go ahead and put a little box up here just to help keep that in mind, and change this to green just so you know what it stands for. It's a TP. And actually I'm going to make that a little bit darker. But then once you get that draw done, you can just take these out, and then cleans up your chart a little bit while you're still keeping that first fib from last week on the chart. So those are the levels I've got. Moving into tomorrow. Now, I know I said I was going to be out this week. I'm actually leaving to Vegas tomorrow. So this will be likely the last trade plan for myself for the week. Let me actually update this to extend into tomorrow. So as always, regardless if I share my levels with you or not, I'm sure you're all capable of plotting these key levels and doing the plan. But just a reminder, the 15-minute opening range, we're looking for that to be set. Then we're waiting for a breaker, and then either you're getting in on the continuation of the breaker. You're going to be mindful, though, if this was actually where the opening breakout was, of any key levels. I would be very hesitant on entering at a key level until we break it, and maybe we do the classic break and then retest, stay above, and then go. Otherwise, the same principle could be applied on the initial opening range breakout. You have your breaker, you retest, and then you go. Another thought, though, is we might break, retest, and then fail. You may want to look for the retracement back to the opening range high and then get into a short. I would be looking at internals before I make these decisions on either going for the long here or going for the short, and waiting potentially for some retracements. Those certainly can help keep you out of false breakouts. But I would be lying if I said, okay, wait for the breaker, buy at the retest, and then go long, because if you just wait for this and buy, you could easily lose your trade if this continues to sell off. So it's important, as always, put in a stop loss, whether it's the opposite end of whatever breaker candle you're looking at, the opposite end of the opening range, so the opening range low at this point, or if you want to use the opening range mid, say this is the midpoint of the opening range. At the very least, put a stop loss on your charts. If you don't have a stop loss at all, you can get wicked out. You could lose your whole account in the matter of seconds if a big wicking candle appears and you have nothing to protect yourself. And then, of course, as always, like I was saying earlier, pair your entry decisions with confluence. Look at where the tick is trading in relation to the direction that you're trying to trade. Also, keep in mind the volume that is coming through. If we actually show the volume bar, turn on the studies, we can see we have extreme buying at the same time as this breaker forms. You have extreme volume still occurring on the volume bar. And then if you look at the VXN, what do you see? You're still inside the opening range, but there is a candle printing below the mid-range point, and then you get this behavior to continue selling off on the VXN. At the same time, you see the tick going from the extreme selling sentiment that it was at, and you see that start to rise. It hits the 0 line, and then it continues above. Of course, it comes back down. You get a little bit of sell-off, but overall, you had a lot of buying today. So pair your entries and your exits with confluence. Look at your internals. Be mindful of your key levels. Just because you break out doesn't mean enter. Maybe wait for a retracement. Or if you are going into a breakout where a key level is, I would be very hesitant on entering that trade until you either have a retest and a confirmation that you're staying above. So let's say, for example, today, if this initial breaking candle, this yellow candle here, was going into a level right off the opening range, and say this level was a prior day high, this is why I mark this in red, because I think of it as an example of potential selling or resistance. If this was to break today and tag this, I would not be getting into this trade. I would be waiting for it to break out and close above and stay above. Maybe potentially, retrace and then enter. But before you get into your entry, make sure that you are looking for any potential key levels. And to help you and everybody else, there is this checklist that you can go through the pre-market prep, see if your trade qualifies, have some entry rules set for yourself, whether it's the 15-minute, 5, 3-minute orb. Look for confluence and be prepared for your TPs, whether it's half the opening range, 100% of the opening range on the ES, or a quarter of that on the NQ because the ranges are higher, or if you're just looking for a certain dollar amount. Make sure you have that, the idea in your mind of where you want to get out. So just as always, set up a trade plan every single day. Don't go into the markets without some kind of plan or some levels drawn. Just like everything else in life, you want to prepare for it to be in your favor. Quick example would simply be, I was watching these kids across the street practice baseball. They practice every single day, and they go into game time with a game plan. Just like you should be with trading, you should be practicing. If you're not comfortable with this strategy, find a strategy that you want to go with and practice that. If you're not comfortable with the opening range breakout, practice it on a sim, practice it in a demo environment. You can also leverage the evals and practice through those, but an eval, of course, is going to cost you some money. So the whole thing I'm trying to say is practice, practice, practice. Bring that practice into the live markets with the trade plan. And as always, you can follow myself or several others. There's a ton of ORB communities in WAP.com. But if you're new to this YouTube channel, check out orbtraders.com, orbtraders.com. Check out the description below. You can join the Discord. It's free for the rest of 2025. It will continue to be free in 2026. There will be some paid features, though, opening it up. But you can go ahead and get into the full Discord now. And then come 2026, if you want to continue into the paid versions or the paid features, you certainly can. They will start at $25 a month. So not too bad considering how much you could easily make in the markets, especially on a day like today. Anyways, that's going to be my last trade plan that I'm going to publish for the Discord this week. I'll be back next Monday. Hope you guys have a good rest of your week. Just be mindful of the news events that are coming. And I would say stay flat before these actually print if you are currently active on those days that they print. Anyways, that's it for me. Have a great rest of your day and enjoy the week. Good luck trading as always.